Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to today's live stream. We've got a lot to cover today. We have got the precious metals coiled for what appears to be the next phase of the breakout. Some metals like platinum already having a huge run. We're going to talk about silver today as well and why it's looking like silver may be on the verge of a huge run as well. I mean, it's already put on a lot of gains, but there's more to come. We're also going to discuss the mess that is playing out across the world right now. I mean, is it any coincidence that we are facing a major debt crisis here in the US? Geopolitical escalations are taking place across the board. We're seeing the price of oil spike today. We'll talk about that. Risk of a war with Iran seems to be on the rise. We've got civil unrest breaking out across the US, and at the same time we've got the metals breaking out. And I do see some folks saying hello in the chat there. Let me know in the chat if you can hear me okay. Let me get a quick audio check. Also, if you just put anything in the chat, it helps boost the engagement for this video and helps get this information out to more people. So I greatly appreciate everybody who takes part in the chat. You know, if this is your first live stream, I don't do this all the time. It's going to be a little bit longer probably than the edited, finished videos that you're accustomed to. You'll have to put up with me, clearing my throat, maybe repeating a few things. Sometimes I have these Shatner-esque pauses in the way I speak, so you have to put up with that as well. Just get that out of the way, because every time I do one of these live streams, I get comments to the effect of all those things I just listed from folks, I think, who just aren't used to the live stream format. So anyway, let's just start off with this post that I posted on June 9th on X. And if you haven't followed me on X, by the way, you can find me at Stack Smarter. I've only got about 2,500 followers over there, so I know a lot of the viewers on YouTube are not following me. I would greatly appreciate it if you headed over there and gave me a follow. But this is what I wrote 2 days ago on Monday. I said, today's silver continues its breakout from a large ascending triangle that dates back to the COVID lows and the subsequent rally. It's a very bullish development that could send us to $40 an ounce in rather short order. At this point, though, the metal has become a bit overbought, so a consolidation or a retest of the breakout level may be in order before we truly launch to orbit. And then yesterday, the 10th, on Tuesday, I wrote silver's cooling off. Today we had a slight down day. Now on Monday, the RSI had hit 74. That's the relative strength index on the daily chart. We'll look at that in a moment. But that had suggested that maybe silver needed to cool off, needed a little bit of consolidation here. I said a retest of the $36 breakout zone wouldn't surprise me. And as long as it holds as support, then the uptrend stays intact. Dips equal buying opportunities. Let me know in the chat if you think that pullbacks here in any of the metals should be viewed as buying opportunities, because that has been my take for some time now. And I think that take leading up until this point has been proven correct, because now silver sits near the highest price level in 13 years. But let me know if you're buying these dips. I think buying opportunities are going to be present in the dips here. So let's take a look at the chart of gold. I want to start off with gold today. And you'll notice that gold peaked back in April, on the 22nd of April. Gold rose as high as $3,500. First time in history, record all-time high price. And it had been in a bit of a downtrend since then. Then on the 2nd of June, gold broke out of its downtrend. Okay, so that's number one on this chart here. Then, it kind of went up to a new high at 3,400. So not a new all-time high, but showing that it had broken out of this downtrend. Then it retested that trend line here, touched down to 3,300 again, and now it is rallying. So what we see here is a breakout from a downtrend, a retest of the downtrend. What happens is the resistance, this line that gold had been butting up against, now becomes support, and gold bounces off of it. Let's look at platinum, because there's a very similar story here in platinum. So platinum broke out of this multi-year downtrend. We can kind of zoom out and you can see that top line there is this multi-year consolidation. And then recently, the platinum price on the 20th of May broke out above that trend line. What did it do? Rose a little higher, retested that trend line, and then it really took off. I mean, platinum's up today. It's up, 2.2%. At the highs of the day, it was up about 5%. So platinum has had a huge, rally up here off the lows. Just a few weeks ago, platinum was below $1,000, and now it's up over $1,200. And thank you, Art Joe Go, in the chat there. He's been a member for 14 months. I appreciate all of the members who support the channel. If you want to support this channel, subscribe, like the videos, share the videos on social media, and you can follow me on X and you can sign up for my free e-newsletter. There's a link down in the description. Now let's go to silver here. Let's take a look at silver's chart after examining the action here in gold and platinum, where we've had this breakout, a retest, and a bounce. Now let's go to silver. Where are we at here? Well, I'll zoom this out so you can see this, multi-year ascending triangle that we've been following in recent videos. Okay, now recently, like a few days ago, on the 5th of June, that was Thursday, we saw silver briefly rise above this trend line, touched back down below it. On Friday, we got a break above it. On Friday, the silver price closed at $35.96, so right at the $36 level and above this trend line. So everybody was wondering, on Monday, are we going to get a big smackdown? Is Mr. Slammy going to come in and smack the price of silver back down into this channel? Well, that's not what happened. On Monday, we got a big rally. On Monday, the price of silver was up 2.15%, traded as high as $36.88. Now we've got that retest that I talked about in those posts on X. Where has silver fallen? Well, in the lows of today, silver went as low as $36.02, right to the $36 line, exactly where one would expect a retest to go. We've rallied a little bit off the lows of the day, but I view this as a great entry point in silver because I believe what we're going to see is a move like what we saw in gold and like what we saw in platinum. You get a breakout, a retest, and then a bounce. And that will take us potentially to the $40 to $42 level in silver, given the size of the ascending triangle that it is breaking out from. One would anticipate a fairly significant move. And this retest is a totally normal thing. We actually saw this in gold as well, I believe, when it broke out from that large cup and handle formation last year. Saw a bit of a retest during that breakout, and then it bounced. And, totally normal thing for the metals. Now, today's live stream is sponsored by SD Bullion. If you want to buy some gold, silver, platinum, this is the place to get it. It's where I buy mine. They've got a great deal on Canadian platinum maple leaf coins right now, $65 over spot, or $64.99. Now, the thing about platinum and palladium, they're very thinly traded markets. Art Joko, thank you for the super chat. He says, what is your take on buying platinum? Well, I'll tell you what my take is on buying platinum. I like buying platinum. I like buying it a lot more under $1,000. But those days, I think, are gone for at least some time. And, if you remember, the platinum price topped out in 2008 around $2,500. It was more expensive than gold at that time. And for much of the past several decades, platinum has been priced higher than gold. But to me, at $1,300, that's what you're going to pay for one of these coins, $1,330. Yeah, it's a lot higher than it was a couple weeks ago. Platinum's been on this big rip. But from a technical standpoint, platinum looks like it could go much higher. And you're still paying way less than an ounce of gold. You got gold at $3,300. Platinum, a physical ounce of it, is going to run you $1,330. So I still think it's a solid deal. This would be my choice. Also, if you want to get exposure to platinum, so I own some platinum coins and some bars, but I also own some platinum ETFs. The reason that I like the ETFs more, I don't really advocate the ETFs for gold and silver unless you're maybe doing something like PSLV, the Sprott physical silver ETF, because I view most of my gold and silver holdings as long-term savings Whereas I view platinum and palladium as a bit more speculative, right? I like them because they're precious metals, they're hard assets. I think they're incredibly undervalued at their current prices, but they are a bit more speculative. And if we saw a big spike up, let's say, in platinum or palladium, let's say it goes higher than gold, I'd probably look at selling at least some of my position. And I think liquidating a paper ETF much easier than finding a buyer for platinum and especially for palladium. Now, if you want to get paper palladium exposure to that, there's the PALL ETF. Now, I am not advocating anybody buy these particular ETFs. I'm not giving any financial advice, but I do own both of them. I have a position in both of them, and I'm glad I do because platinum especially has been moving up quite a bit. And with these illiquid markets, so this is SD Bullion's buy page, what they'll buy back things from you, bullion items. So they'll buy back platinum maple leafs right now. I mean, this is subject to change, of course, but they'll buy them back at spot, which is actually pretty good. If you think about the fact they're selling them for 65 over spot, they'll buy it back for spot. That's a relatively narrow spread for physical metal. They're buying back platinum bars for 35 under spot. If you got platinum eagles, I've got one of those. They'll buy it back for 25 over spot. And then palladium, you see, you take kind of a big haircut on the spot price when you sell it back. So that's one of the problems with these slightly less liquid metals. So that's why I think, I have one palladium bar, just sort of my nice to have thing. And if the price spikes up to $3,000 plus, kind of like what we saw following the Russian invasion of Ukraine, when there was a lot of concerns about palladium supply, if that happened, I would probably sell that bar, but you have to take a little bit of a haircut. So anything beyond, that 1 ounce, I'll probably just be buying the ETF when it comes to palladium. Just my thoughts on that. We're going to cover some additional news today as well, don't worry. But before we do, especially since you asked, let's talk a little bit about platinum and palladium, why the price has the potential for going so much higher. It's because the supply is incredibly small. So this is the report on COMEX inventory levels for platinum and palladium from yesterday, June 10th, 2025. And you'll notice their combined total holdings of platinum is 353,414 troy ounces. When it comes to palladium, it is much less, 56,019 troy ounces of palladium over at the COMEX. So think about this. Let me pull up my calculator here. The total palladium holdings, let's say palladium is $1,100. It's actually a little bit lower than that, but let's just say $1,100. I'd have a nice round number. That means that all of the palladium in the COMEX warehouse is about $61 million, $61.5 million. Now that's pretty incredible when you consider that the amount of gold that they have, here's the same report, but for gold, they've got 37.9 million ounces of gold over there. So you've got 37,929,466. That's the total troy ounces of gold. If you multiply that by a $3,300 gold price, it's going to take about $125 billion to buy all the gold. That's the market cap of the gold at the COMEX. So you compare that to 56 million for the palladium. It shows you just how small the supply of those metals is and why even a small amount of increase in demand or a small interruption to supply can really move the needles on these metals prices. And thank you, Art Joe Go, for gifting some memberships in the chat there. All right, so let's move on to some news now that we've covered the metals. We've got this deal potentially between the US and China, a quote-unquote trade deal, although it doesn't actually sound like, when you delve into the details, that anything more than the previous deal that they cooked up in Geneva has been agreed to. So they keep using this word framework. So a framework and implementation plan has been reached. It still requires the signature of Trump and Xi. Apparently, what they're telling us is there's going to be a 55% tariff on Chinese goods. Some experts are saying it's going to be closer to 33%. Trump says that China's tariffs on U.S. imports are going to remain 10%. I think that what we can take away from everything that I've read here is that there really is still a tremendous amount of uncertainty, right? Nobody knows what's going to happen. It could be that, they continue these negotiations and tomorrow the deal completely falls through. I mean, nothing is written in stone here. Nobody really knows how this is going to work out. Maybe they're planning for a total decoupling and not a reconciliation. We still have to see. But this is one of those things that's taking place, right? A disruption to the global trade system that is coinciding with this breakout that we are witnessing in the metals. It's just one piece of the puzzle. Another is the inflation data. So we got the CPI data for May today. It was slightly under expectations. It was a 0.1% increase for the month, 2.4% annual inflation. That was against expectations of 0.2% and 2.4% respectively. The core CPI was up 0.1% and 2.8% annually compared to 0.3% and 2.9% expectations respectively. So you would think that with this slightly cooler CPI data, we would get a higher likelihood of intervention or rate cutting by the Federal Reserve. But that doesn't actually seem to be what we're getting. And maybe that's because of tariff uncertainty concerns. I mean, they keep waiting for price increases to occur related to the tariffs. And, it would make sense logically that tariffs would raise prices, but it really hasn't come through in the inflation data yet. I suspect it may, but it's interesting to me that the Fed seems to obsess over this increase or this uncertainty in inflation data related to the tariffs. They're saying we don't know how high inflation is going to go because of the tariffs. They call it inflation. It's really just price increases. It's like if you put a sales tax on something and the price goes up because you have to pay the tax, it's not really inflation. The inflation comes from the monetization of the debt and the out-of-control fiscal policy in Washington. The Fed wants to obsess over trade policy in terms of tariffs, but they want to completely ignore and make no comments whatsoever regarding the out-of-control fiscal policy. It's very interesting. It kind of makes me wonder, is there some political aspect to this? A lot of people float that idea, and I don't have, the TDS, Trump derangement syndrome. I don't have the reverse Trump derangement syndrome either. I try to think about things objectively, but it does kind of make you wonder if there's a political aspect to this. And, one thing I've frequently wondered about and speculated about, I don't know if I've done it on this channel, but it's something I've often thought about, is I wonder if the reason that Trump was allowed to be selected as the president, and, I do suspect that there's more of a selection process than an election process here. I wonder if that was to serve as the fall guy for the culmination of this economic crisis that has been in the works for a long time. And certainly he has some culpability in it. He was president before, ran up the deficits massively. Sounds like he's going to continue to do that based on the big, beautiful bill. But there's been a lot of other people responsible for this as well. The previous president, the guy before him, the guy before him, the guy that launched, trillions of dollars of military adventurism in the Middle East, George W. Bush. All of these people contributing to this crisis, which is now reaching a peak. And I wonder if Trump is going to be served up as the fall guy for all of this. And if he is, one thing you're going to have to watch out for is the way that the pendulum swings. And in 2028, if we get some kind of a massive economic crisis, which is always a possibility at any point, given the massive debt load and the fact that we're heading to war and probably going to expand the debt massively, you could see a far left character come to power in 2008. And that'll just seal the deal, right? It'll be Venezuela-style inflation, price controls, etc. But anyway, this is what the president had to say about the CPI data. He said, CPI just out, great numbers. Fed should lower 1 full point, would pay much less interest on debt coming due. So important. So that is an interesting point that the president raises. Now, if you ask me, the right way to pay less interest would be to stop accruing so much of it, so much debt, that is, if you want to pay less interest on your debt. But it is becoming a real crisis. interest on the debt is going exponential. In 2020, it was $500 billion. Now it's over 1.1 and growing quickly as rates remain elevated here. And there's a lot of debt, remember, that's coming due in June. I think the number we covered was $6 trillion. Now, I'm sure the Treasury has some kind of way to, spread that out and massage the numbers and avoid a massive debt crisis. But it is interesting that all this debt is maturing. We're heading to war. The Fed seemingly very hesitant to intervene here and reduce rates, all at the same time that the metals are breaking out. I mean, feel free to put your chat in the comments down below if you're watching this later, or in the live chat now if you're tuning into the live stream. Because look at this. This is the CME FedWatch tool. So this kind of shows you what investors are pricing in, what they're anticipating the Federal Reserve is going to do next. Now, after a soft inflation report like we got today, you would think that the odds of a rate cut would increase. But that is not what we are seeing. So right now, this is for the July meeting. If you look at June, I mean, everybody is basically in lockstep that there's going to be no cuts, no hikes. We're going to just stay where it is. So, I mean, if we do get a cut or a hike, I mean, that doesn't seem likely, but if we do see something at the June meeting, it could actually move markets quite a bit because it would be something that's not priced in. But let's look at June. So right now, the odds of a 25 basis point rate cut, according to the CME FedWatch tool, 18.6%. A week ago, it was 28.5%. So there's actually less anticipation following this report than we had a week ago of rate cuts. And then, look, there's this 0.1% chance. I don't think that was there yesterday. Yeah, that was 0% chance yesterday, 0% a week ago. But now you have this tiny percent chance of a rate hike. Now, in order to control inflation, that's probably what the Fed should actually do. But the problem is that would collapse the whole economy if they were to hike rates here. And 0.1% chance, yeah, it's not very high, but not a 0% chance either. It's very interesting that that's popping up here. But let's move on here. Let's talk about what's happening with crude oil, because this is interesting. The crude oil price up almost 5% today, $68. In fact, let's refresh this chart and let's see. Let me get rid of this calculator here too. Sorry about that. I've had this calculator on. Yeah, so still very high, 67.85%. This is likely due to the fact that a possibility of an escalation with Iran has risen significantly over the past several days. We have got yesterday, this is thehill.com, a report that the head of U.S. CENTCOM confirmed during a Tuesday House hearing that he gave President Trump and Defense Secretary Pete Hegseth a wide range of military options to pursue if the United States nuclear talks with Iran go sideways. And that does appear to be the direction that they are heading in. Trump had an interview with Fox News where he said that the Iranians suddenly are becoming much more aggressive in the negotiations. The negotiations are not going well. This is a report from Al Jazeera from today. Iran's defense minister has said that his country would target U.S. military bases in the region if conflict breaks out with the United States. So we are heading to war here in the Middle East. There's escalations in Eastern Europe as well. Ukraine had its sneak attack via drones on the Russian nuclear triad, so that was a major escalation. But what is happening in the Middle East now is really starting to move the needle on the price of oil, and that's how you can tell that it's a real, genuine threat. We may see Israel launch attacks on Iranian nuclear sites. The U.S. may get involved in that. It does not appear that the nuclear talks are going well. And how could they? The U.S. is demanding that they end nuclear enrichment. The Iranians say that that's basically a non-starter. It's not going to happen. So it's only a matter of time, it seems like, until a broader conflict in the Middle East breaks out. That will likely send the price of oil much higher, as well as safe haven commodities like the precious metals. Sometimes when I cover these geopolitical topics, I'll get these comments. People say, hey, stay in your wheelhouse of talking about gold and silver coins. It's like, well, if we go to war, if World War III escalates to the next level, I mean, it's already kind of started. But if it really becomes a global conflict, or if the Middle East becomes involved in a big way, that is very relevant to safe haven assets like the precious metals. And again, this is just another one of these things. It seems like a coincidence, right? All these things coming to a head at the same time. War, debt crisis, safe haven assets spiking, inflation is very present, it's being obfuscated, information's being suppressed, we're being told we have a great economy. It's not the case. Here's one from S2 Underground. This is a guy, I like his YouTube channel a lot. The wire reports that he puts out are a great way to stay informed. A very nice job of doing unbiased reporting, if you ask me. And here, he's put together a map of all the planned protests for this weekend. I believe this is going to be taking place on June 14th. We've got the civil unrest breaking out in LA, been going on for several days now. Well, now it looks as though there is an orchestrated civil unrest that is being funded by, a bunch of NGOs, some wealthy individuals. You can research this yourself, but these protests will be taking place in a number of cities. The military, National Guard, and Marines have already been deployed in LA. Is it a coincidence that we are seeing this unrest taking place just as a major conflict is about to break out? It's a very convenient excuse. One thing that Canadian Prepper has posited is that this is an excuse to deploy military assets around the country to these cities before the war breaks out. So you have this, excuse to have your military assets in place prior to a major conflict breaking out. Look, all I've got to say is get prepared. Probably want to have some hard assets on hand. And a lot of times I'll cover these topics as well, and I'll get a lot of pushback. People say, well, you can't eat gold and silver. Well, stack some food too. Take care of your basic necessities. Make sure you have access to clean water, food, all those things. But from a financial standpoint, assets that are outside of the digital system is what I want to hold right now. Makes me feel a lot more secure knowing all my assets are not tied up in a digital electronic financial system. Because listen, if war does break out with Iran, if war does escalate with Russia, we're very vulnerable to cyber attacks in the US. That may very well be the first volley of that conflict. And despite the fact that we have this big military, we're spending more than $1 trillion annually on it as part of the debt problem, there are vulnerabilities here, and we're all susceptible to this if you're like me and you live in the US. So having tangible assets that are outside of the financial system, aren't vulnerable to something like a cyber attack, then, that it's a good idea to have those things. And you also have to wonder, and it kind of gets me thinking, you've got this debt crisis, this system, which is clearly unsustainable. It's in need of a reset, is the bottom line. I mean, the debt is out of control. There's no way to pay it off. There's no politically viable way to reform entitlements. That's why no matter how much lip service a politician pays to balancing the budget, it never happens. I mean, we had Doge at the beginning of the current administration. Everybody said, oh, they're going to fix the debt crisis. They're going to reform all the spending. What did we see? A few cuts here and there, sure, waste, fraud, and abuse, quote unquote, the stuff that nobody has a problem cutting. Okay. And then the big, beautiful bill, the budget, according to the CBO, it's going to increase the deficit over the course of the next decade by about $3 trillion. So not only are we going to not diminish the deficits, we're actually going to expand them. And it's not any particular politician's fault. They would never get elected if they actually tried to reform the system. It's too far gone, and people have been too conditioned to, expect their cut of the bloated federal spending. So everybody wants to reform it until you want to take away their specific benefit. But it's interesting that, we've got this system that is so far beyond reform. It needs a reset. And then what better excuse than a war or a cyber attack, which forces a reset, forces a transition to a CBDC. This is all just kind of speculation on my part. And that is, sort of how these live streams go. You got to expect some out there speculation from me, because I'm just trying to contribute to the conversation, give you my unique take on things. And I hope you enjoy those. But it makes me wonder if there's a little bit more to what we're seeing here. The flight into safety, silver taking out the highest price in 13 years, heading to war, despite being told that, the wars would be ended. That doesn't seem to be the case, right? All the conflicts around the world are escalating, and the financial system is a lot more vulnerable than the powers that be are letting on. So do me a favor, smash the like button, share this live stream, leave a comment down below. All of that helps support the channel. If you haven't already, subscribe to my free e-newsletter, follow me on X at StackSmarter, and thanks for watching, everybody. I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker,